Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments.
All right, today we're going to walk through the U.S. market peripheral notes for Thursday, April 2nd, 2026.
And just so you know, this video presents a direct informational narration of the source document.
We've got a lot to cover, and it's broken down into 6 parts. We'll start with the big picture, looking at how valuation frameworks are being reshaped. Then we'll get into sentiment, focusing on an aggressive address from Trump. After that, we'll analyze a huge intraday shift driven by algorithms. We'll also do a deep dive into Iran's toll booth strategy, examine how different asset classes are diverging, and finally, wrap up with a look at market technicals and some specific sector dislocations.
Okay, let's jump right into Section 1, Introduction, Reshaping Valuation Frameworks.
So what we're seeing today is a market that's becoming a direct battleground. Geopolitical tools are being used to deliberately intervene in the financial markets. This means that the traditional ways we think about valuation, based on economic fundamentals, they're just not holding up. It's really turning into a direct contest between the U.S. and Tehran, fought right on the trading floor.
And this has turned investing into a whole different ballgame. As Warren Buffett puts it, short-term trading in the current environment has, in substance, deteriorated into a wager on the probability of political maneuvering. For investors, the focus has had to shift. It's less about finding that next big winner and more about simple survival management.
Now let's move on to the second section, which is all about sentiment, and specifically Trump's aggressive address.
The overall market mood really took a hit, and you can trace it back to Trump's speech. His ultimatum was pretty familiar, classic negotiating style for him, but it landed at a really vulnerable time for the market. See, the S&P 500 was already technically overbought, and that speech was the perfect catalyst. It triggered a wave of profit-taking from large capital players who are already sitting on some nice gains.
So the day started rough, but then everything changed in a flash. That brings us to Section 3, the intraday shift, which was a massive algorithm-driven reversal.
Right at 10:30 a.m., a few key signals started coming out of Iranian state media, and the market's reaction was, immediate and dramatic. The Nasdaq experienced a huge vertical reversal, completely wiping out its earlier losses.
So what was the news exactly? Well, as we can see here, Iranian state media talked about drafting a navigation agreement for the Strait of Hormuz. But the strategist's reality check? It's likely just a delaying tactic, an attempt to soften the pressure from about 40 other countries. At the same time, the GCC Secretary General mentioned seeking normalized relations with Iran. Again, the analysis suggests this is more about self-preservation for the Gulf monarchies caught in the middle of this U.S.-Iran conflict.
The bottom line is, this sudden rally wasn't based on a real change in the geopolitical situation. No, this was a classic high-frequency trading event. The algorithm saw positive keywords, and in a market with very little liquidity, they went on a buying spree. It wasn't a genuine reversal at all.
This brings us to a really critical piece of the puzzle. Section 4 is a deep dive into what's being called Iran's toll booth policy.
Iran's strategy here has 3 core pillars. First, it aims to break up the Western alliance by creating economic conflict. Second, it tries to force the United States into a tough diplomatic spot, a sort of moral dilemma. And third, and this is the big one, it poses an existential threat to the entire petrodollar system.
Now, here's where it gets really serious. The most destructive part of this whole plan is the idea that these tolls could be paid in Chinese renminbi or even cryptocurrency. Why? Because that would happen completely outside the US-controlled SWIFT system. This is a direct challenge to the petrodollar, and that's something the US maritime hegemony simply cannot tolerate.
So, with all this going on, how did different parts of the market react? That leads us to Section 5, Multi-Asset Class Divergence.
Well, the stock market might have been fooled by those headlines for a moment, but the oil market certainly wasn't. WTI crude quickly reclaimed the $110 level. This tells you that serious energy traders saw through the illusion of an agreement and knew the real risks were still there.
And it's not just traders. We're also seeing a very clear and unified stance from the capital elites, people like Buffett, Diamond, and Ackman. Their public statements all seem to point to the same conclusion, that resolving the Iran issue once and for all is a necessary long-term cost, even if it causes some pain in the short run.
All right, let's bring it home with our final section. Section 6, Technicals and Sector Dislocations.
So, for the week, the S&P 500 posted a gain of 3.36%. But here's the thing. This wasn't really a sign of new strength. It was simply mean reversion after 5 straight weeks of declines, just the market bouncing back a bit.
Now, looking at some individual names, we saw a few interesting things. Blue Owl, ticker OWL, put up a 5% redemption gate. That's a huge red flag for liquidity in the private credit market. Over at Tesla, their Q1 delivery miss is forcing analysts to reset their valuation models, thinking of Tesla more as an energy infrastructure play now. And finally, Globalstar, or GSAT, saw some buzz around Amazon acquisition rumors, but a deal that big faces a ton of uncertainty in this kind of geopolitical climate.
To wrap it all up, the VIX closed near 24. That tells you the market is still very much on high alert. The takeaway here is that until this geopolitical fog clears, the market is likely to remain in a defensive, high volatility state.